Trying to understand the eminence of real-world assets and the DeFi world? Then you are welcome to Link to the Chain, a podcast brought to you by Vsauce. It is designed to help you understand the happenings of decentralized finance along with real-world assets. I am your host, Nikki from Vsauce. I will be inviting experts from the Web3 industry to share with you their experiences and ideologies on RWAs and the DeFi world. Hey everybody, today I am pleased to be joined by Terrance and Kevin, the core developers of Isle Finance. Thank you for joining us today. Could you both just share with us the story behind Isle Finance and what kind of sparked the idea, and what gaps in the DeFi market are you guys aiming to fill?
Okay, so I'm Terrance, one of the core developers of IO Finance, and so I'm going to talk about what brought IO Finance. And so I'll start with the name. So IO Finance, IO is like if everyone knows, it's an artistic name for island, and we think it seems like ISLE. If you add ND in the end, it's like island. So it's like we're building a DeFi lending protocol for everyone. And the business problem that we're trying to solve is this area in the DeFi ecosystem, which is called supply chain finance. Yeah. And the reason that we're doing this topic is that our company has a long experience working in the supply chain industry, where we're particularly solving the problem of trade finance as a fintech company, where we try to solve the working capital needs of these suppliers by building a full stack SaaS solution. And so we are at the front line trying to solve this problem, and we discovered that, this supply chain finance problem could really be helped with an DeFi protocol that is specifically designed for this kind of application. And so that was the start of the idea, and then we started planning and designing this protocol that would best fit the supply chain finance business model. And that's what we came up with, IO Finance. And yeah, that's the gap that we're trying to fill.
Great. I also love the fun name. I think anyone can really appreciate a nice, meaningful and intentional name that also goes along with, exactly what you guys are trying to solve. So I love that. And what would you say is the current problem with DeFi lending in today's climate?
Yeah, back in the DeFi summer days in 2020, and things were booming. But as the market shifted, we saw a huge drop in terms of total value lock. And especially lending protocols would among the category most affected. So we know like Aave and Compound, there are prominent protocols using an over-collateralized model, and which means you can never borrow more money than the original amount you put in. So it's a bit counterintuitive, but here you can see the heart of DeFi lending has always been about leverage, and just like serving, but you are always at the mercy of waves. Yeah, so when the market is good, and then it's great, but when it's not, well, things could be very tough. So now real world assets are like a sturdy boat in our like serving analogy. So they are stable, they are tangible, and they bring this much needed balance to the current DeFi ecosystem. In a bear market, where traditional assets see higher yield rates, and real world asset DeFi can offer competitive returns. So it's about bridging two worlds: the dynamism of DeFi with the stability of real world economy. And this integration is pivotal, especially in turbulent markets, as it introduces a new level of resilience and inclusivity to DeFi. And that is the game changer we are actually working on at our finance to reshape DeFi lending and making it more accessible, stable, and responsible to the broader economics landscape.
Yeah, Kevin, I think you brought up some really good points there. It sounds like you kind of get out what you put in. It's all about balance, and
Yeah,
especially when it's a bear market, which, is it does happen, it's kind of inevitable. It sounds like aisle finance is there to be, like you said, to be there with the accessibility and the stability, which I think are two very important factors, especially in this industry.
exactly.
And in regards to, supply chain finance, which is crucial for the global economy, how does aisle finance address common challenges in this area specifically?
Okay. So supply chain finance is like an age old need that has existed like probably for decades, since the really start of we having this global trade and financing thing. And the problem with that is that there's some financing decisions that just can't be made effectively by the old system. If you could see, like especially in this age of like COVID and all these trade wars that are happening all around the world, the geopolitical turmoils, you can see that, for example, if you there's like a lot of these cosmetic companies in Korea where they expanded a lot just right before COVID. And then right after COVID, because they spent too much capital just expanding and investing in these new stores, new departments. And then when COVID came, they got no customers. And then a lot of them just went bankrupt and they were forced to shut down. And that was the problem with the working, that is, they were having a working business model, but they just didn't solve the working capital problem. And that choked them. So that is like a great example of how supply chain finance is important for anyone that is in part of the supply chain. So going back to the question about how IO finance is going to solve these common challenges in this area, we can refocus on how the business, like the structure and of different participants in the current supply chain finance industry. So in the past, the banks were responsible for everything related to supply chain finance. They decide who to fund, and they also provide the funds as like the chief financier, because they have the strong balance sheet with a lot of deposits, and they are regulatory compliant and all that kind of stuff. And then these days, the banks are increasingly discovering that they don't really have the capacity to make these lending decisions, because things are getting more complex, and like the supply chain is scattered around the world. They can't decide who to fund, and they don't have the newest technology to make these new decisions. And therefore, these fintech companies, we would call them like supply chain fintech companies, started to spring up in this, particularly this decade. And they were just trying to build this information platform for buyers and sellers inside the supply chain to use, and then to use this information to make decisions, like make credit decisions, who to fund and who to supply with, and they'd have to direct funding to them. But behind them, they still had to partner with banks, which are the premier financiers of these fintech companies. So it's like they're trying to build a new rocket with an old engine. And that's how we solve the problem that IO Finance can solve. Because even these fintechs are building these state-of-the-art new applications, they were still limited by the speed of the banking industry, where they had to make these decisions and give them the funds, because these fintech companies, they're not like banks. They don't have deposits that they can lend out to their customers. And we figured that DeFi could be the new engine that can make faster credit decisions and give faster liquidity to these fintech providers. And that's how IO Finance tries to position itself inside this industry. And so how does this approach transform access to capital for businesses? It's like blockchain. If someone who's listening to this podcast, you probably know what blockchain has in their the key characteristics of it. It allows capital to flow, because it's like default global. You get capital from around the world, like lenders from around the world that have stable coins, they get access to this real economic activity. They get to fund these real world economic activities, and I think that is like really crucial to a lot of investors around the world. And besides that, from the business side, they get to access this liquidity and like global intelligence from around the world. Like these investors decide who they want to fund with their intelligence, and they decide to fund this company. So if we are able to put we are able to aggregate this liquidity around the world and then try to move more of the supply chain, the information of the supply chain, like the transactions and the funding decisions, and we move this underwriting process on chain, we could really like speed up the system and make everything more modular and interoperable. And yeah, that really increases the transparency and interoperability of the entire system, which could significantly improve future credit decisions as regard to supply chain financing. So yeah, we think, especially in this age where like not a single company can really solve this issue, we think building a decentralized system would be the best decision. Like we could have this funder that is behind all these fintech companies, and these fintech companies would be able to get in-time liquidity to solve the frontline business needs. Yeah.
Got it. Yeah, that was a lot.
Yeah.
I'm sure I'm sure our audience is going to definitely, want to repeat and listen to all that information because it's some good insight and background on, you mentioned earlier, Terrance, about geopolitical climate that obviously has a huge impact globally. And whenever things like, war happen, it definitely hinders supply chain, and it definitely makes things more harder to access and prices skyrocket. So it is very important to kind of have some sort of, like you said, fast, easy, efficient, and something that you can depend on for businesses worldwide, because things like that can just really mess up a whole ecosystem throughout the world. So it's nice that Isle Finance sounds like it's trying to open up the market, reach more market demographics all around the world. And like you said, a big thing is interoperability.
Yeah.
And that's a mouthful. Yeah. So my next question, can you give our audience kind of like a really good, simple or real world example of how does supply chain finance really work with, maybe just kind of how would you explain it to someone who's super new to the industry without kind of bogging them down with too much Web3 jargon? How would you give a good example of how it works? How can a buyer interact with Isle, essentially?
Yeah. So if to give a really simple example, you could think of like there's like three participants mainly in this flow, where there's the buyer, and then there's the supplier, and then there's the funder. The funder is the person who is providing the funds to make this financing possible. So in a real world scenario, there would be a buyer, for example, that could be Apple, and then the supplier would be the supplier of Apple, for example, like these smartphone manufacturers, Foxconn or Pegatron, something like these. And the thing is, when Apple gets the phones, like for example, the newest iPhones from its suppliers like Pegatron, and then Apple would have would have to sell these iPhones, right? So the moment they get these iPhones, they don't usually pay their suppliers directly, because they're like maybe they have enough capital, maybe they just don't want to do this, but they don't usually pay them directly, as they haven't sold the phones yet, so they haven't really turned them into cash, so they were able to pay back the suppliers. So it's like every time a good, like maybe a product gets produced, manufactured, and then gets moved to the front, and then they try to sell it on the shelf, like to the consumers, before the end result happens, the cash flow doesn't really like flow back into the supply chain. And that has been a really big issue with, like, this is like a working capital issue, because after you made these products, you have already spent the money to make them, but before you sell them, you don't really get the cash back. and you can't reinvest them in the new production cycle. Yeah, so that's the problem of supply chain. And what supply chain finance is solving is, as long as we can be confident that this transaction was real, and then Apple is able to sell these phones for a lot of profit, and that's really obvious. And so this is a good use case for supply chain finance, because we're confident that Apple is able to sell this thing super fast and they're able to make a lot of profit, and there is a high probability that they will be able to pay their suppliers back. Yeah, so the step-by-step scenario would be the supplier provides the goods to Apple, and then Apple waits for 30 days before they pay back to the supplier. And then the funder comes in place in the middle. For example, if the waiting period is 60 days, it could be longer depending on the type of industry you're in, but let's say it's just 60 days. And so after Apple gets the goods, normally the supplier would have to wait for 60 days before he gets the funds. But now if the funder comes in, it says, hey, supplier, I can pay you early, like right now. So you can invest this funds in new operations, and Apple will be paying back to me later. So the funder just is like a delegate who pays the supplier first, and may probably at a discount because there's time value to that money. And then the supplier gets to work on this new round of operations. And then after the 60 days, Apple will pay back the funder. So that is like an explain me to like I'm five explanation of supply chain finance. And so if it's for IO, how IO works in this particular use case, you could think of IO as the funder. And so we just basically take the place of the funder, and with some Web3 integrations, like we try to make these assets tokenized. So for example, when the buyer gets the goods from the supplier, it usually also gets an receivable that the receivable belongs to the supplier, where it signifies the payment obligation of the buyer to the supplier. So we would tokenize these receivables as NFTs, like these non-fungible tokens that signify the payment obligations. And the buyer will be able to tell IO Finance that, okay, I would approve this. I would prove that this NFT is true and it exists, and I would like IO to fund the receivable for me. And then after that, the supplier would be able to submit these receivables to IO Finance and redeem the funds, which we would give them through early payment. So through that, the NFT signifies the payment obligation. And when it gets transferred to the IO Finance, the buyer will have the new payment obligation to pay back to IO protocol. And that is how the value flow works. You get this NFT, and then with this NFT, you can get early payments. It's like just a real world invoice where you can use on chain. Yeah, and I think that's it. Like a brief interview of how a buyer and supplier can interact with IO.
Yeah, that does sound like it's kind of being dependable. You're being there for everyone. It sounds like it's a win-win type of situation as well. And like you said earlier, it kind of equals the NFT will equal like an invoice or something. It reminded me of like a credit card bill or statement that you get. So it's kind of like things that people don't necessarily want to see, but they know that they have to deal with it. And at least you're kind of making it into a nice little package in the form of an NFT. So that's pretty cool. And then, I mean, in terms of real world application, kind of like how you just explained that, really great example. As you mentioned that, can you also explain what is reverse factoring to our audience and like what are the benefits of that?
Yeah, of course. Just followed by Terrance, he really gives us a very detailed example of how traditional factoring works. But in reverse factoring example, imagine you are a buyer in the supply chain and you have got a credit card, just Nikki just mentioned, and the credit card is specifically designed for your business purchases. And that's actually reverse factoring in a nutshell. So it flips the script on traditional invoice factoring, and rather than focusing on the seller, we start with the buyer. So this approach that buyers optimize their cash flow by delaying payments while suppliers get paid quickly. So it's definitely a win-win situation we are desired. So we help sellers and buyers. In sorry, the logic behind the entire business model is that we lack the predictability, and so the buyer and seller are really happy to pay a reasonable price for it. So at IO Finance, unlike current real-world asset lending protocol, which also have pool doing and invoice factoring, we include buyer and seller directly. So we create one pool for each buyer instead of lending capital to the fintech broker or wholesale borrower and just purely boost their business. So by doing so, by utilize reverse factoring, we can truly isolate the risk and ultimately leverage the power of blockchain and make the entire process of reverse factoring even more smoother, more transparent, and really efficient. So especially in today's market, where traditional lending could be a bit skittish, I think, and reverse factoring stands out as a solid, reliable business. Yeah.
Yeah, no, that's a great point, Kevin. I think it also kind of makes you sound more selective, maybe a little bit more intentional with who you work with or who you would like to kind of bring onto this type of platform. And it almost sounds a little exclusive. You don't just want to put it out there for anybody, and you don't want just anybody working with Isle Finance. So I think it's good to have some, what's the word I'm looking for? Like to having some boundaries in a way, but also making it still accessible to those who actually need it. So that kind of also brings me into another topic, which is it has to do with risk management, right? Because you, like I said, you don't want to just let anybody kind of join the group, so to speak. So with the crypto industry, it's definitely experienced significant volatility, ups and downs, and a lot of risks, especially in the last year. And recently, we have seen some RWA protocols that have encountered issues with bad debt. How does Isle Finance mitigate those risks? And what are the measures that will be implemented to ensure that security and credibility of transactions on the platform?
Yes, so first, we'll have a pool admin for each pool, and the pool admin who really plays a crucial role in onboarding buyers and funding loans. So those pool admins are required to sign legal contracts with those buyers, and these contracts are should made available for public inspection to make sure the on-chain consensus is abiding with legal enforcement. And moreover, we those pool admins also need to deposit some pool cover, which acting as first loss capital for aligning the incentive between lenders and admins. So in case um, if we foresee a potential loan default, the pool admin can manually mark it as impairment loans, which converting the principal and interest included by the loans to into unrealized losses in our accounting. And if someone wants to withdraw right now or just right away, he should bear the unrealized losses. So this is the mechanism we encourage people to stay and reduce the irrational withdrawal. and really mitigate the risk for the default cases.
Yeah, it's really important, especially whenever you mention transparency and having, things like in traditional finance, the prospectus. It's out there for the general public to kind of view and review all the little details that actually go into what you're actually investing in, what you're putting your money into. And when it comes to pool admins, it just makes me think of a lifeguard at a swimming pool. But anyway, in regards to the future, right? The future outlook of aisle finance and DeFi in general. What are the long-term goals that you have for aisle finance, and how do you envision your platform evolving? What role will it play in the broader DeFi and global economic landscape? Can you touch on that a little bit, Terrance?
Yeah. So in terms of the long-term goals of IO Finance, I think we first have to iterate that we have two bets about the ecosystem of of the DeFi RWA landscape. First of all, we believe that stablecoins will be the next financial platform. It will be a really important thing, especially for cross-border payments. And then the second bet is that decentralized decision making of credit decisions would significantly improve the loan underwriting ability of like our systems. So if these two bets are correct, we believe we will build in that direction for IO Finance. And the long-term goal of us is definitely to be the funding engine of any major fintech application that is involved in all sorts of receivables payments. And yeah, we try to make our protocol, it's called in a protocol. So anyone that matches the specifications and rules that are written on the IO Finance protocol, they will be able to like just plug in and use this funding as long as they play by the rules. And we try to make this rule as robust and as has the functionality to satisfy the needs of most customers as possible. And that is what we'll be working on. And we think that there's definitely a lot of parts that we're ignoring because it's really just really early and we really have a lot to learn from either banks or old fintech companies, what they need, how do we satisfy the needs of the customers, for example, how do we find a balance between privacy and transparency, how do we do selective disclosure, and all that kind of really important features. We think that will be really important as to what we're trying to build. And we'd like to, it's like, I think it's more like a Web 2.5, like we're trying to build the financial engine of major Web 2 applications instead of like we're not trying to like revolutionize, make a whole new thing that nobody uses. We want to make this thing as interoperable for all Web2 companies so that they don't have to reinvent the wheel, and at the same time really just get not exposure, like they get the benefits of this efficient, decentralized, and global infrastructure. Yeah, I think we will play a pretty important role in the DeFi global economic landscape. And we'll try to also do some partnerships with a lot of like payment innovations within the Web3 ecosystem. So as more financial activity moves on chain, there's definitely going to be more need for IO Finance as this receivables financing protocol. Yeah.
No, that's amazing. And I totally agree with the point about stable coins, how it will be the next financial platform. I think we're already seeing a lot of that kind of happen, at least over here in the US with, as y'all know, USDC and with Circle. That's probably one of the biggest, it's out there. People are using it. Maybe people who are using it don't even realize exactly what's going on. They just probably think, oh, yeah, it's a digital dollar, which technically it is, but maybe some of them don't even know it's technically like crypto in a way, right? But it's just stable, I guess. And I think that's a part of why this podcast exists. It's there to kind of take things that folks might be or might not be aware of and let them know, hey, you're actually utilizing blockchain technology right now. Did you know that? And so it's kind of cool when you put it into perspective. And oh yeah, I loved it when you, Terrance, and your very detailed explanations. Because yeah, you said words like robust and like satisfying the needs. Of course, people like that, right? We want our needs to be satisfied. But then also what comes with that is, like you said, setting boundaries and making sure that you have a balance. These are all really good, adjectives on what the industry kind of needs, especially like you said, we're in that 2.0 era. We're not fully maybe at Web3 yet, or I know we're working towards it, but there's still that bridge that needs to be fully paved, before everyone can start walking across from Web 2 to Web 3. So I think we are kind of in that 0.5 era. And really important things that you did mention. And it also sounds like whenever you were saying earlier, you kind of want to include the buyer and the seller directly to interact with the protocol instead of lending the money directly to a wholesale borrower like a fintech broker. That makes things more, I think, intimate and cozy, but also I think most folks, when it comes to finances, it's a very sensitive topic, right? So you kind of want people or folks or clients, customers, whatever, to feel comfortable, trustworthy. Those are also big values when it comes to blockchain, right? Dependability, stability, operability, balance, transparency, trustworthiness. You want things that are going to actually be tried and true and not someone hacking or changing the numbers. You know what I'm saying? So these are very important
Definitely.
touch points that you brought up. And anyway, before we do wrap up, I would love for you to share how people, folks, audience, anyone curious about, DeFi, RWAs, all that good stuff, crypto, NFTs, how can these folks get involved with Isle Finance, and where can they go to learn more about your project as things unfold?
Yeah, for those who are interested in joining the journey of Isle Finance, we are excited to announce our upcoming beta version on the Sepolia testnet. And the best way to stay updated and get involved is through our social media channels like Twitter or LinkedIn. So you'll find the latest news, updates, and instruction on how to participate in our beta. And we are always looking for a community feedback and involvement to refine and enhance our offerings. Yeah, thanks to having us today, Nikki.
With this, we come to the end of the episode. To our audience, thank you for listening. If you enjoyed what we are discussing about the RWA and DeFi world, please don't forget to subscribe to Link to the Chain and share it with others. To catch all the latest from us, you can follow our Instagram and Twitter at Link to the Chain. Looking forward to sharing with you guys the next episode. Stay tuned.